All right. Good morning. This is Fari Hemsey. It's 9:03 a.m. on Friday, I believe the 16th of October 2020. Okay. We did a webinar a couple of nights ago on market timing, and it was a pretty good hit. We did a 1 day extension on 1 day, so it's total of 2 days on our 5 year anniversary. We're still getting questions, but it's not that complicated. But anyhow, we are answering it. And for those who have really legitimate, good questions, we're extending the time a little bit for them. But what we asked them to do is watch the webinar. I'd rather have you watch what you're getting into before you get into. All right. So that's where we are with that. We'll send you a note on that as a reminder. Retail sales came in this morning, and then we have industrial production. I don't care about inventories. Consumer sentiment, yes, I do. Your Michigan is at 10. Okay, so keep an eye on that, and then let's come back and see what the actual retail was. What's the response here? Come on. I just want to see our consensus data. Always look at how the number came versus the consensus. Prior 80.4, consensus 5 is your range. Okay, you don't want this too high, too fast. It gets into trouble. Yeah. Retail sales, yeah. Irrational exuberance, not good. All right, here we go. This came in. Here's the number. Bravo. This came in good. This came in good. Look at that. 0.7, 1.9, 0.3. X-ray equals 1.5. So there's a 0.4. Okay. X-ray and gas for 1.5. Okay, gotcha. I don't know what the control group means. I gotta look. I gotta read it. So I have no idea. All right, good. That's good. So that's for this week. We don't have next week. We'll deal with next week. Next week. Remember, it's not econ data on Monday, so we can. But we'll see the calendar. Our problem is that this doesn't report like it used to be before. You would click and it would jump to that day. It doesn't do that. I don't know what's with it. Or maybe it's the free package. But I mean, I even get the paid package and didn't make a difference. I don't know. I gotta check the guy. The CEO is on LinkedIn. Okay. Timer. We had we yeah. No, this is weekly. Sorry. Yeah, look at that. Look at that. Okay, good. Let me go to daily. Okay, here we go. Quickly. Okay. We went beyond the number we talked about, but we returned and looked close at top. That's a big reversal. That's just the way I read that chart. So same thing with NDX. We had a pretty decent pullback and full sigma level. At least more than that. This is probably 1.5 sigma level from that peak to this low, yeah. But this was a good reversal. How are we doing this morning? 10 on 84. Hallelujah. Welcome to America. Exactly. Okay. Stay long, my friends. Stay long. Drink some Dos Equis and stay long. Morning, Craig. How are you, sir? All right. Again, I have an incredible announcement for you guys. You guys sitting down? Bob Caffrey, and Bob Caffrey was the father of Gil and Mark Caffrey, one of the oldest option traders alive on this planet at the age of 10, the age of 92, in Vero Beach. I think it's Vero Beach. Or Deerfield, I'm not sure. It's up here. He signed up for Radar Screen. And he's going to be in the webinar next Tuesday. How about that? How about that? Think about that concept. 92. He wants the indicators. He just said, I'm going to send some money to TradeStation. Can I get started? No problem. Boom. Set me up. I said, yes, sir. We'll set you up. Of course, sir. It's my honor to have you. This guy was trading options in the back of NYC because there was specialists. With other specialists, before there was Black-Scholes model, before there was SIBO, they were doing what's called pure OTC back then. Really true OTC contracts. You would pick your date, you would pick your name, because they were not listed. And your duration, and you pick a price. You agree, you sign, you pay, you receive, boom. On the due date, you settle. Very simple. Yeah, exactly. Oh, that's a great honor for me. I've been with him once. Oh my God, you've got to take notes when he's talking. This guy's 92 is sharpest option trader I know, short of maybe what do you call it? Who's this character here? Yeah. Admiral Esposito, correct, yes. Our very own Admiral. Hello, Murray. What have we talked about? What do we keep pounding the table and said watch for? Look at what trade transportation did yesterday. Outside bar. That dot is outside bar. Okay. To the upside new high. Hello. The shorts shall be started. Why is this telling us? What does this mean? Depends. Who knows? You can interpret it any way you want. The way I'm interpreting, from what I see, what I read, is that market calmness is going to come back. You can read the rest of the story from there yourself. Okay. Market is saying that. Remember, you can't go against the market in aggregate. Individually, nobody cares what you think. Nobody cares what I think. Nobody cares the person next to you thinks. The aggregate, market is usually right. Yeah. We don't individually pick winners and losers. The market, but market does, because in aggregate form, it's a very powerful tool. We shall see. We shall see if that works out. All eights are positive on the contenders. SV1 Momo. We pulled back. We are almost near the high level. That's from here. Nothing new there. Okay. About to rotate on the weekly. This is significant. You see that? We're zero right now, but let's see where we close today. We hooked here. That's good. That's good. That should be expected. And we're now in the channel. +1, +2. You stay in that channel. Party hardy. Have your hands on afterburners. Be ready. Troll up. Okay. It's all math and physics. Don't forget. It's the pressure of the money that's coming in. Remember, for every buyer, there's a seller. For every long, there's a short somewhere in there. As the pressure comes, down here, we need the shorts to go up. Up there, we need the longs to come down. Too much of excess, that creates it. If not, you're in channel. As your channel, you go up or you come down in channel. That's all. Until we get to a point that it's going to reverse. Yeah. And good news is here that we did not have a huge 52 weeks high and low. Therefore, a new high is in order. That's our expectation. 1 second. Let me check something. What we're doing that on that side. All right, now. Hold on. Moving forward, SQ. Yeah, I don't expect much here because we already pulled back. Sideways, there may be a slight positive slope here on this SQ. And you can see the walls for it, the sigma charts are collapsing. Why? It's coming into this area again, you know. It's getting to 125, 1 to 130 area. If it sits down there, goes sideways, that's expected. 1 second. That's 9/11. All right. Okay. What do we do on this? Really? Okay. All right. So, VIX and VXZ, no signals. We're seeing at 0 sec. Obviously, I'm sorry. This is today. This is yesterday. Yeah, you'd see it went to 2 sigma. Actually, this is significant. Went to 2 sigma and pulled back. Sign of reversal. Okay. So this was at the low. This is at the close. We're at 0 and non-neutral. Today could be a tough day trading. Okay, Mark, can you hear me? Could somebody check to Mark to make sure he can hear me? Okay. And somebody also tell Larry Parker that I need to call him. Yeah. What is wow? Forward to wow. What are we talking about forward? Is that the right message to the technology issue? Remember, I'm not a good mind reader. I'm just a poor dumb immigrant. PDI, that's why it's on a lingo page. Okay, no worries. It'll come to you. Not a problem. All right, so hold on. There we go. All right, we're good here. All right, so TD. Let's go to TD quickly. Yeah. This got a little bit messy, but remember, rendezvous point is when these 3 points line up like that, like this. So, and there's nothing moves in a straight line. These are not linear programmings. These are complex, non-linear systems. Markets are so. It's not going to be. That means it's not super efficient. You know, it doesn't going to work all the problems. It's got some ebbs and flows. It's a tug of war. So this messed it up a little bit. That's okay. But we still due for that rendezvous point, and we're not here. We're moving it over to the right now, it seems. So okay. I still got to work on this. 59. It still was not a good day. Okay, think of it that way. We did close a 5 panel low, but price is not the only input here. So there's some advanced decline issues and tick issues and so forth. So that pulled it back at that, even though internally we pulled up. Now, intraday, I don't think we brought it up, but during the day, I look at this a couple of times a day. No more. I mean, it's not a tick by tick issue. It's too slow, but we were right about 50, right about 50. So intraday, the final point pulled up. So that's good. That's good. Okay, quickly. Treasury is not going to do anything right now. We're fairly quiet. We took the highs out. This is the low. Wow, 235. Yeah. I'm going to disable this too for the time being. 1 second. Okay, there we go. All right, so we can see what the IRX is doing. 91 day. What do you call it? Discount rate. Moving forward, let's go to SPX chart here. Okay. Again, it's reactive, same as we have here in terms of numbers. Numbers in aggregates are pretty much same they were a couple of days ago. The key number we want to look at is breaking 75, and then I would be really watching if the break of 80, because I know around 85 is going to stall. Normally has historically, but let's see if we can even get to 80. So this zone here, 75 to 80, much to be watched. And remember, this is done about an hour after the close. That's a stockcharts.com, and charts is a pro. And it's alpha $, Sierra Papa X-ray Alpha 200R. And make sure you're doing 20 and 50. Not a bad idea to have it. I have it programmed. I had a program in Chicago. This number is actually the program definition. You manage it down here. And because you can choose a background, that's whatever you want. But mainly is that these two. The default, I think, is 10 and 20. If you turn dual moving averages on, I strongly suggest you use 20 and 50. Okay? So, yeah. Now, OTFs. By the way, don't get me wrong about the chaos. Chaos was good to us. That's why you guys are here. Think about it. If the chaos wasn't there, I wouldn't be where I am on Timer Digest. Half of you wouldn't have heard about me. So chaos is good, but market chaos, yeah, we can manage. Government chaos, poor people protection chaos, that stuff. Yeah, that's what the pendulum is swinging the other side. But at least we have a system that clears itself over time. At least we hope in theory. Quickly, overnight. Okay, we pulled up. This is 15 minutes. Just give us a look again. High beta here. This is some earnings that went bad. Or I said no, that's midnight. No, I don't know. Take that back. Earnings would be here. Sorry. Yeah, that's date is 10:16. I'm thinking 1600 4 p.m. Remember, all of our times we post is military times. So I have no clue what this is, but obviously NQ drop at that time corresponds to here at midnight. Was there any news? Anybody knows? Any help, please? There, I have no clue. The good thing is that for now we have recovered, and we hovered around 0.6, pulled up again. We're in +1, +2. That's ideal area you want to be. Then you go up. If you go too far up, it's overbought. They'll sell into it. If you buy too far down, the fear has taken over, and the smart money comes in, picks up on the bottom. Morning, Peter. How are you? And morning, Peter, number 2. We have 2 Peters here today. Nancy, hold on. Let me get you on the other side. Okay. Please make sure Mark's headset is, Mark Caffrey's Skype is ready for midday, for an hour after the close, for Mark Esposito gives his talk on the ES. In the NQ room. We're doing it in the NQ room, guys. Because of all you guys are saying that he doesn't have audio. He can't connect to ES room because ES room is in California. But he can come here. We have the charts ready. Exact charts are running. We flip it up, and then he talks. And 10 minutes, we record it. It's great. All right. DMC is doing good. Don't forget again. Tuesday night, we're doing a webinar on our screen. The DMZ part of it is also working now. We had on CI/CD diff at DMZ. That's right. We have a watch list now. It's about 300 names, and it percolates. It's great stuff. You'll see. The great news is, I have to tell you, 92-year-old father of my classmate Gil Caffrey and his brother here, Mark Caffrey, runs our options. One of the oldest option players alive. He was a specialist at NYC. Used to trade with other specialists in the back. Before there was a Black-Scholes model. This is late 50s, early 60s. Black-Scholes finished in 73. As it finished, they basically started, because of Chicago and all that. Martin Scholes used to teach there. Immediately they started building the SIBO, and you have listed options. So he was trading pure OTC options over the counter. Okay. One of the sharpest guys I know is at 92. He's a PMT customer. Last night he signed up for Radar Screen. Are you with me? Yeah. Okay, I'll fix that. Thank you, Chief. Yeah, I thought it was coming, but not this early. Is it 18? Usually does it on 18, Senor. Okay, Johnny's just telling us that we went to. Oh, because 18 would be over the weekend. Makes sense. Okay, I'll set it up. No problem, Chief. So, I'm just absolutely delighted. So I wrote a note to TradeStation. I said, get this fellow set up, and please give him the respect and the help that he needs on a priority basis. Because I go back to a while back with Caffrey family, and they're like my brothers. So. And I look at him as like dad. He's just so smart, extremely smart fellow. Yeah, I mean, I met him down here. We're having coffee at Starbucks and croissants. And he gave a new option strategy. Heck, I didn't get out of SIBO, and I taught all those years over there. He just sit there. You go over there and said, "Huh, oh my." The idea he gave to Gil, got to get him for option research. Back in college, 28 days. Gil got an A. Okay, got an A in his senior thesis. That was the subject. From Quant. You know who's Bill Quant? Head of economics department at Princeton. Forget about that. Look at some of the theories and options he's worked on. It's not easy to get an A. I was intimidated to take his course. To get an A from. It was intimidating to survive that class, much less get an A from him. He wrote in 28 days. Yeah, these guys know options, so. Trust me. Okay, there we go. And with the help that Christian and Mark Esposito giving him on the scanner, on the radio screen scanner, yeah, I think we're doing a little changes over there. Nancy, we have a new member signed up. Please make sure we can get him in. Thank you. I sent you the email. All right, let's go to OTF. MBS is here. We're not too far. Look at the shape of MBS. We're pulling up a tad. And then also try to keep an eye on the longer term. Or longer, I'm saying longer term. It translates to longer term. It translates to longer term. Why? It's slower. Obviously slower. It's these guys don't come in. These guys are like Tico compared to these guys like you and I would be, These are very slow, steady guys. But look at the center line. What is that? Right translation. So get some clues from the charts until contrary evidence shows up. So we're going to be pushing up here. We did a good retest last night. Well, yesterday's session. And then a good recovery last night into the night. But I would stay bullish for today. Okay. Notwithstanding all of this is news. We're in crazy times, dealing with some of the most craziest people I've ever seen or heard of. So just keep your ears close to the ground on the news, because that's the only thing that could derail this. We've already gotten rid of this week longs. That flush that you see here, this move here, hold on. This move here, intraday. Oh, let me not do it this way. Okay. Are you serious? Oh yeah, there's a gap down. Sorry, yeah. This gap down, okay, and this retest got rid of the weak longs. That's what basically we did. We still closed the slightly negative from the gap, but you see how they came up. So same thing you see here. It's stronger. Yeah, the more problem we have on the medical issues, the Nasdaq gonna do better. That means we're gonna stay more dependent on the on the technology. With that said, I'm closing the